In today's episode, we're going to talk about severance pay and the tax implications of receiving severance pay. Now, in the next episode, episode 54, we're going to talk about unemployment tax. But for today, with severance pay, we're going to talk about what is severance pay? Is severance pay taxable income? And then why some people seem to think that severance pay is taxed at a higher rate. All right, so let's get right into it. What is severance pay? Severance pay is what a full or part-time employee can receive if they are involuntarily separated from their job. Now, from federal employment, severance package is almost, and I say almost because I'm not 100% sure, required. Now, within the private sector, it's not always required, but it's important to note that with the severance pay, if you agree to that when you leave your job and you sign, you do forfeit your right to come back and sue the company.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 53 of the Tax Relief with Timalyn Bowens podcast. Right now, we are in a time of economic uncertainty, and there are many people who are losing their jobs and facing losing the things that they hold dearest to them and their family. So while yes, those people are in my thoughts, and yes, those people are receiving my prayers, I want to put a little more action into it and talk about something that would be of benefit to them. In today's episode, we're going to talk about severance pay and the tax implications of receiving severance pay. Now, in the next episode, episode 54, we're going to talk about unemployment tax. But for today, with severance pay, we're going to talk about what is severance pay? Is severance pay taxable income? And then why some people seem to think that severance pay is taxed at a higher rate. All right, so let's get right into it. What is severance pay? Severance pay is what a full or part-time employee can receive if they are involuntarily separated from their job. Now, from federal employment, severance package is almost, and I say almost because I'm not 100% sure, required. Now, within the private sector, it's not always required, but it's important to note that with the severance pay, if you agree to that when you leave your job and you sign, you do forfeit your right to come back and sue the company. All right. So if you were considering a severance package and you're not sure if it's the right amount or fit, that is something that you would want to consult with an employee or employer attorney with. All right. Because remember, I can only help you with the tax implications and then point you to resources. Now, the part that kind of messes people up when it comes to severance pay is whether or not it's taxable. You all, the IRS wants you to pay taxes on every single red cent you receive, right? Unless it's a gift from your grandma. And even then, if that's over a certain amount, grandma has to pay gift tax. But with severance pay, because it's coming from your employer, it is taxable income. And not only is it going to be taxable at the federal level, it's also going to be subject to FICA, which is your Social Security and Medicare. And then in addition to that, it's going to be subject to your local and state tax, if applicable. All right. So for example, I'm here in Louisville, Kentucky. Kentucky would want their 5%. Louisville, Kentucky would want their 2.2%. And then for my people who maybe live in Florida, they're not going to be facing the same situation because they don't have a state income tax, right? So when we look at that, if you're looking at a severance package, and let's say the severance package is $25,000, right? Just keep in mind that the amount that you see on the package is not going to be the amount of the actual check or disbursement that you receive, because you pay into Social Security and Medicare 7.65% of the wages. Okay. So if we're looking at FICA, and I'll go back to Louisville, Kentucky, like in my previous example, we have about 5% for the state. We have 2.2% for Louisville. So what that does, it puts us at 14.85%. Now, check this out. Remember, I said, let's just assume, just for this example, that the severance package is $25,000. Well, if we look at those amounts, the FICA, which is Social Security, Medicare, local, state, we're not even taking into consideration any federal withholding. That's already $3,712.50. So instead of receiving a full deposit of $25,000 that you agreed to in your severance package, you'd actually only be receiving $21,287.50. All right. So when looking that over, again, consult an employer attorney, but you also want to be mindful of the tax implications as well. So one of the questions I get is, hey, I'm already losing my job. Why am I being taxed at a higher rate for my severance pay? Well, the reason why sometimes it makes you go up a tax bracket is because depending on the time of year that you receive the severance pay, you're receiving more income throughout that year than you typically would. Let me give you an example. Let's say that you've been with your employer, you've worked with them 11 months, and then they offer you a severance package. So you work January through November, right? Then you receive severance pay in December. The severance pay is usually going to be more than you would have received in that month time period. So with that being said, let's say that you're in the 12% tax bracket. Well, if you receive a lump sum payment in December, that's going to make your income for that tax year potentially go up to the 22% tax bracket, which is a drastic change and jump, right? There's nothing in between 12 and 22. Now, with that being said, typically there are two different ways that you can receive your severance pay. You can receive it in a lump sum, or you can have it in smaller payments over a certain period of time. If you're listening to this on the day that the episode is released, which is going to be February 28th, 2025, a lump sum probably isn't going to be too drastic because you don't know if you're going to have income in the future this year, right? Your overall income may be lower, God forbid. However, if you're listening to this at the end of a year and you're being offered a lump sum, you're going to want to take a look at, okay, how is this going to affect my taxes? Is this going to put me over into the next tax bracket? If that's the case, you may want to consider receiving smaller payments over time. Now, with this being taxable income, some people are concerned about how and where it's reported. You won't get any additional tax forms. What will happen is that your previous employer will include the severance pay in box 1 of your W-2 with your wages. And again, is going to be included in box 3 and 5, which is how the Social Security and Medicare is calculated as well. Okay. So if you're looking at that and maybe you don't have the option to take it over a period of time and you're looking and the employer's telling you like, hey, you have to take this in a lump sum, what are some things that you can do to avoid going into that next tax bracket. Or maybe you can't completely avoid it. Maybe you can help yourself to not get hit so hard. Well, one option is to maximize your retirement accounts. Okay. If you have a traditional IRA or 401k, contributions to those accounts lower your taxable income. So, for example, if you put $5,000 in one of those accounts, that's $5,000 that you won't be getting taxed on. That's a way that you can still put up for a rainy day and have it for savings, but not have to deal with the tax consequences right now. Okay. Another option that you have, if you are eligible, is to put this money in a health savings account. Now, this one is not going to be as straightforward. Only people who have a high deductible healthcare plan, that's the type of insurance where you are going to have a low deductible but higher insurance, or I'm sorry, you're going to have lower premiums but a higher deductible if you have to make a visit. Only those people can contribute to an HSA. So why is it tricky? Because if you're receiving a severance package, that means you're losing your job, which typically means you're losing your health insurance. If you do not have a high deductible health care plan, you cannot contribute to an HSA. If you do contribute to an HSA without having a high deductible health care plan, you will be taxed on the amount still, and you'll have to pay a 6% excise tax penalty. So that's something you don't want to do. However, if you know you're receiving the severance package and you know when you're going to lose your benefits, such as the health insurance plan, you would just want to make sure that you max that account out before you lose the benefits. Because the day you lose that health insurance is the day that you lose eligibility to contribute to the health savings account. However, even after you've left the employer, you don't have the high deductible healthcare plan, you can still use your HSA, and those will be tax-free funds that you can use for qualified medical expenses. Now, if something happens and you have to use the funds for something that isn't a qualified medical expense, you will be taxed on the amount that you take out. Okay? Now, I'm sharing all of this as a resource because if you are facing unemployment from losing your job, taxes are probably one of the last things on your mind. However, again, I'm putting this out as a resource. So if you find yourself in this situation, you can always come back and get an understanding of what the tax implications are. If you're someone who is already facing IRS debt that you just couldn't get a handle on, and now on top of that, you've also lost your job, I want to share with you that there is an episode on this podcast about how to temporarily delay IRS collections and enforcement. And what that means is that you can get a pause on your account so that you don't have to worry about the IRS issuing a tax levy on your account. So they're not going to reach out to your bank to clear it out. They're not going to go reach out if you start receiving unemployment and take that. Instead, you get about a year worth of time to get back on your feet and get your financial situation together. If that's something you're interested in, I am going to have that episode linked down below in the show notes. I am most definitely rooting for you. If you know someone else who is facing this situation with losing their job, please, 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 it would be my honor and privilege if you would also share this information with them, because not only will you be helping them, but you'll also be helping me on my personal mission to fill the tax literacy gap one taxpayer at a time. And I thank you. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.